Hey, what's up, my friend? So I think, one thing that you probably notice is this curtain right over here is just changed, right? My wife got it, and hey, it even matches my top today. How about that? So yeah, back to this week's market analysis. But before that, I think it was a pretty busy 2 weeks for me, right? We were doing the webinar, Profitable and Practical Trading Strategies for the Part-Time Trader. Then we just closed the enrollment for the Trend Following Mentorship Program. So yeah, things were pretty busy, but I think, things have now settled down and, probably, heading back to our normal days, normal week that we usually have together. So now back to the markets, right? I'm going to share with you two markets that has just broken out of their range. So I'm going to share with you which markets are these and how I'm going to manage their trades as well. And on top of it, right, I have questions from a number of traders who actually wonder, Rainer, how do you go about, managing your trades from start to finish? And this is what we'll be talking about as well, right? A trade on copper, on how I actually manage it from start to finish. So all this and more in this week's market analysis. I'll see you there. Now, the market that has broken out recently is actually none other than soybean. So right, this is a market that we have talked about, I think, quite extensively over the last few videos, right? So for those of you who are new, right, looking at this for the first time, right, just look through the last 2-3 videos and understand why I actually went long, right? So let me just briefly recap what this market has been doing. So if you look at soybean on a daily time frame, it has been in a massive downtrend. How do I know it's in a downtrend? Well, if you look from left to right, so this is the left side of my screen, this is the right side. All the way, it's trading lower, right? So in this chart that you're seeing, right, in this lower lows and lower highs, right? Lower highs, lower highs, lower highs, right? This is what I call a downtrend or a declining phase in the market. So what happens is that after a downtrend, price eventually has to, one day go back up again, right? He has to trade higher in the future. But the thing is, we have no idea. We have absolutely no idea when is the day it will trade higher. But that's it. We can look at the market, we can look at the chart in terms of technical analysis and find clues from the market that give us a so-called warning that it may be ready to trade higher. So what is the piece of warning that I shared with you guys? So what I saw was that soybean has been trading lower lows, lower highs, as you've seen earlier, and then it came into this period of consolidation over here. You see over here, I think it's been consolidated for almost a year, right? If you follow me, you know that I went long, and to be honest, I went long by mistake, right? This was an honest mistake by my part. I went long on this. I believe it was this candle over here. Right, I was looking at the futures market, I was looking at the CME soybean, and I saw that it has broken out already. So I thought, okay, since that one has broken out, right, I should go long already. But unknowingly, the chart that you're looking here belong to soybean on the seaboard. So they are on different exchanges. So when you are trading the instruments on different exchanges, you want to pay attention to the right instrument on the right exchange. So this chart you're looking here belongs to soybean on seaboard. So I made a mistake, right? I went long too early. And to be honest, I don't even know it happened until I went long over here and I got stopped out on this spike down. So after I realized my mistake, I told myself I still want to get long because, again, right, the consolidation is still the same, right? It's still setting up to be prime for a potential breakout. So where did I went long on the second time? So I went long once again when price, number one, trade and close above this area of resistance, right? This was my entry to get long. I had stop loss of 280R. So this was why I went long on soybean. And another additional factor that really, sweetened the thing was that you have this period of consolidation just below resistance. So what is this telling you? Well, this is a little bit advanced, so bear with me, alright? So when you see a consolidation just below resistance, right, this is a clue that's telling you that there is a sign of strength in this market. Now, why is there a sign of strength in this market? Because think about this. I'm sure you agree with me when I say that resistance is an area where there will be potential sellers to come in and push price lower. So if the resistance is strong, price will come into area of resistance and then trade lower. But what happens if price comes into an area of resistance and then it starts to consolidate and couldn't get lower? What is it telling you? Well, it's telling you that there are potential buyers or there are buyers willing to bid at these higher prices. Even though price is at resistance, they think it is still of a fair value, so they're willing to bid at these higher prices. So there is a sign of strength over here. So this is an additional factor that sweetened the deal for me on why I went long. So I went long. Currently, this trade is up about 1 hour in profits. And a lot of times I get questioned, Rainer, how do you trail a stop loss and stuff? For in this example, as of right now, right, I'm trailing using the 20 period moving average. You can see this red line over here is the 20 period moving average, right? It seems to be respecting by this market as of right now. Look at here. Soybean has tested once, twice, thrice, 4 times over here. So I'm using the 20 period moving average. And again, there is nothing magical about a 20 period moving average, and this is not the only way, to trail a stop loss. You can use stuff like, higher highs, higher lows, etc., or even a trend line. So really, it's really up to you and your trading plan on how you want to manage this trade. Okay? So another market that has broken out I want to share with you is none other than the Aussie against the Sing dollar. Again, if you look at this chart, you think, Rainer, is this a chart of soybean? No, right? I'm not fooling around with you. They just happen to look pretty similarly, but this is the chart of Aussie against the Sing. You can look over here. So again, similar story, massive downtrend, period of consolidation, showing you there is a potential signs of accumulation, and finally on Friday, it was Thursday, I believe it's Thursday, it broke above this area of resistance. So I just get long, had a stop loss of 2 times the average true range. So a very common question I get from traders is that, Rainer, how do you tell whether it is not going to be a false breakout? Right, because I go long down here and it pretty much looks very high, right? I long somewhere near the highs. Then they say, Rainer, aren't you afraid of it being a false breakout? And the honest truth is that I have no idea. I have no idea whether it will be a false breakout or not. Right? And this is precisely why I always use a stop loss. Right? I have no way at all to tell whether this is going to be a winning trade, whether this is going to be a false breakout, whether this is going to be a losing trade or whatever. I have no idea ahead of time. In fact, whenever I put on a trade, there's a good chance that 60% of the time, on average, I tend to lose money. That means that I'm wrong, right? I'm usually right about 40% of the time. As a trend follower, as a trend trader, right, my winning rate is not very high. But that's it. When I win, right, when I capture trends, it tends to make up for all the little losses that I incur along the way. So again, this is a very typical scenario. I have absolutely no idea whether this is a false breakout. And because of the fact that you admit ahead of time to the markets that you have no idea whether it's going to be a winning trade or losing trade, what is it going to do? What is it going to do for you? Number one, you always use a stop loss, right? Because you don't want to lose your entire trading account for the fear that you really could be wrong. And number two, you risk a fraction of your trading account. Why is that? Because you don't want to risk too much on each trade. Because again, you do not know whether this will be a winning or losing trade. Okay, are you with me? So this is a very simple explanation, right? Aussie against the Sing. I have no idea whether it's going to be a real breakout, whether it's going to be a false breakout. But one thing I know for sure, right? One thing I know for sure that I'm certain is that when will I know I'm wrong? So you look at any piece of technical chart, I'm sure you can agree with me that this black line over here is area of resistance. Correct? And once price breaks above resistance, it comes back lower. What does it become? Previous resistance turn support. Right? You agree? So if you agree with me that if price breaks out of resistance and it come back, it should act as support. So when will you be wrong? Well, you'll be wrong if price will to break below this previous resistance turn support, right? If you can break and close below this, then it's telling you that this area is no longer holding up. This area, this barrier in the market is not acting the way you expect it to be. And if it's not acting the way it's supposed to be, then what should you do? Get out of the trade. Am I right? You have been proven wrong by the market, right? There is nothing wrong to be proven wrong, but it is wrong to stay wrong. Okay, there's a difference down here, right? So find an area, find the level on the chart where you'll know you'll be proven wrong. And that is a situation where if it triggers, you're out of the trade. No questions asked. Okay, I hope this makes sense for you. And last but not least, I want to share with you a trade that I took, that I've shared with you guys. And again, I think I got stopped out for a small win, I think 0.3 or 0.4 R. So it is none other than, what market was it? It's copper. Okay, copper, right? So just walk you through a quick one why I went short copper. So you look at the weekly time frame, you notice that copper is respecting the 20 and 50 period moving average. The red line here is the 20, the blue line here is the 50 period moving average. Some of you are wondering what's the black line? Well, it's the 200 period moving average. But again, just ignore it for now. Just focus at the 20 and 50 because it is clearly being respected by copper on the weekly time frame. And when I went down to the daily time frame, I saw this pattern over here, right? Well, it's not really a pattern, but it came up into this black line over here, which is the 200-day moving average. Okay, so this over here, this congestion over here is at this area over here on the weekly time frame. This area. This over here is equivalent to this over here. And you know this on the higher time frame is in the 2050 period moving average. It is acting as a dynamic resistance. It is at an area of dynamic resistance on the higher time frame, which is the weekly time frame. So when I notice this happening, I know that this is a potential area for me to get short. So I went short on two different places. Well, actually I went short for two different reasons, right? Number one is for a swing trade. For the swing trade, I went short on the failure test on this high over here. It is a more aggressive entry, right? So I went short, I took half over here, and I took the remaining half as price, close above the 10 period moving average, which you have not seen over here now. And the second approach which I use is as a trend following approach is I went short when price break below this area of swing low and exit again, right, when price close above the 10 period moving average. So where is the 10 period moving average? Is this red line over here if I change it to 10. And that was the trailing stop loss I was using at this point in time. Because again, I noticed price has been respecting the 10 period moving average. And you can see over here, it's been respecting over here as well. So it made sense to me, when will I be proven wrong? Well, so far, right, price has been respecting the 10 period moving average. So this is a structure in the markets, or a structure that is clearly being respected by the markets. So again, I know I'm wrong. If price were to close above the 10 period moving average, chances are, right, this structure that has been holding previously isn't holding anymore, and I'll be wrong. But again, there are more than one ways to trail your stop loss. You can trail your stop loss, for example, say, some of you may argue that, Rainer, maybe this is just a retracement, and then it trades lower once again, it's a retracement, and trades lower once again, and you can trail your stop loss from the lower highs. And yeah, I don't agree. That is a perfectly fine approach as well. So like I've said, right, trading, there are many ways to go about it. And in this weekly market analysis that you're watching right now, is just to share with you my own thought process, and who knows, right, to help you trigger a few, thought process of your own, so you can actually, make it your own and develop it in your own trading style. There is absolutely no right or wrong way to trade the markets, right? I was, in my younger days, I think there were only a few ways, so I was ignorant, right? I was, the kind that you think that, he thinks he knows it all. But again, after, years of trading, right, I'm humbled by the markets. I admit that I do not know a lot of things, but I only know how to, trade the trend, control my risk, and ride the trend. So that's basically, sums up what I do. Okay, so that's it. That's all I have for you. That's all I have for you in this week's market analysis. I truly enjoy your company. I want to say that. And if there's any questions, any queries, don't hesitate to let me know in the comment section below. With that, I wish you good luck and good trading. Talk to you soon.